I want to show a price chart or a type of price chart today. They're called monthly bars. They're really neat because we can eliminate all the noise from the last month and just look at one data point, and it is so telling on what is working and not working. And something has shifted for the second half of 2023. And these monthly bars are telling us where the money is flowing and where the stability is going to come from in the second half. Stick around. Hey everybody, this is RC Peck with Fearless Wealth, and what we do at Fearless Wealth is we manage people's retirement accounts and we make sure that they retire strong. Now, one of the ways we do that is to see if there is rotation happening. Rotation is where one part of the market's leading and then it changes and another part is leading. So I want to talk about the second half of 2023 because I think we're going to have different sectors, different asset classes lead the second half of the year, just like it happened last year. If you remember, the first half of the year was horrible. Market was down 20, 30%. And then the second half of the year was much better. Now, I don't think the market's going to be down. I don't think it's going to crash. I think we are in a long-term bull market, at least for the next 12 to 18 months. But there is going to be some sideways movements in parts of the market and upward movements in others, which again is the hallmark of a bull market. So let me do this. I want to jump over to the charts and I want to show you a couple things that I'm seeing. Now, one thing I'm going to do different on today's call is I'm going to show you what are called monthly charts, meaning each one of those bars is just monthly data. So we're looking at the energy sector here, XLE, which includes dividends reinvested. And we're not going to look at many sectors here, but let's just start with this one. And I'm going to put my blue vertical lines. That's the first half of the year. So you can see that it didn't really do much. What I noticed most was this. Meaning on June 1st, the debt ceiling, sideshow was over and energy started moving higher. So energy actually started moving higher before the second half of the year started. Now, this bar right here, the gray one, that's July. So you see July moving up and we're just now into August. So it's very likely that energy's been very quiet for about, if you think about it, up until June 30th, it went sideways for a year. And it looks like it wants to move higher. So I could see money, price action flowing into energy. And same thing with, let me put up this. Regional banks. Now, regional banks absolutely took a hit. Not last year, though they underperformed, but this year, the first and second quarter were horrible. Now, they finally bottomed in May. And June 1st, again, we got the debt ceiling thing was over. So notice here, this was up until June 1st, debt ceiling, no problem. Those bankruptcies, the second, third, and fourth biggest U.S. bankruptcies, bank bankruptcies ever. I was going to say foreclosure, but that's houses. Bankruptcies, they're behind us. The market digested that and it's moving higher. And here you see regional banks saying, yep, we're good. We're actually going to start moving higher now. And here's the thing I'm noticing in regional banks. When banks are coming out with their earnings, as long as they're slightly better, their prices are popping. We're not seeing that with technology. The first half of the year, let's bring up XLK. Man, technology stocks could basically say just a little bit better than expected. And you'd get, NVIDIA, I think, popped 20 or 30%, but you're not getting that now. Even with Meta, that had great earnings and forward guidance, it didn't have that 30% pop. It went up about 5 or 6%. So you're still getting it with great earnings, but you're not getting it with this huge pop. Now, if you look at technology here, it is absolutely and again, we're looking at monthly bar charts. It's still at lifetime highs, okay? Very likely we'll see technology go sideways for the second half of the year while other parts of the market do better. And that's what we're seeing here, both with kind of sentiment, meaning great news with technology is not as great as it was 6 months ago. And now great news in financials is like, oh my gosh, this is amazing. Everyone pile in, which is another form of kind of seeing that rotation. So you could see technology taking a break. And then what's really interesting is, and I talked about this last week, I'm just going to show probably two more charts. Here's the bond market. Here's the US bond market here. And it's just having a really hard time. It now looks like it's going to retest its October low. It's breaking down. And I talked about this last week, how Japan's rates are going up. Japan's starting to get some form of inflation, which means the Japanese bond market's going to create competition to the US bond market. And I think that's what we're seeing. And so you can see here, again, just looking at monthly charts, if we just look at the first 6 months of the year, bonds tried to break out and go higher and do something, but they didn't. And now that we are moving into, actually, I'll put it there, sorry. That's the first half of the year. It's not looking as strong. It's starting to move down. So expect bonds to have more weakness, which also means that gives us a likelihood that stocks will hold up for now. I said one more chart. I actually want to do 2 more charts with you. Let me just bring up 2 more. The thing I really think that's pushing a lot of things around and has been for the last 2 years is the US dollar. Now, sometimes when I have these conversations with you, even though most of you I haven't met, I'm not talking about trading or day trading or doing crazy things. I simply like to talk about the internals of the market to kind of give you an insight and help to make sure they're like, oh yeah, we probably shouldn't be 50% in bonds, even though we're 70 years old, even though we answered those questions on that Tuesday. 50% in bonds is probably not what's best. That's a very 1970s idea. So I don't want to get lost that the overall way to manage money in your retirement, it's not those risk tolerant questions. They aren't that effective anymore. But here's the US dollar. Look, if this is above, I'll just put it on, if this is above 101, let's just call that the dollar strong, and that will put downward pressure on stocks and even bonds, and we're seeing that right now. And then lastly, just kind of looking at these monthly charts to get an idea of what might be happening in the second half of 2023. Let's just look at gold, and we'll finish off the video here with gold. These are, again, monthly charts, monthly bars. And the last time, I'm just going to put it right here. So back here, if you see my vertical gray line is on July of 2020, also known as 3 years ago. That was the high back there, right? That was the highest closing monthly right there. And nothing up until April of this year got a higher close, right? So April had a higher close for gold. But your brain can see it's really working with this. And this is a monthly closing. Let's just call it, for easy math, $2,000 on a monthly close. You can see, even with your own eyes, that the monthly close is really teasing with that $2,000 an ounce in US dollars. But what you're noticing is it's not selling off. Yes, it's been very painful because basically gold has just gone sideways for what feels like forever. But notice that it's just consolidating near the top, not the bottom, not the middle. It's still in a sideways mess, but you're finding it more end near the top of this channel and not the bottom. The one thing I always learned about gold is gold moves when the change of concern changes for people. So if someone's concerned, but it hasn't increased or decreased, nothing happens with gold. When people get more worried or their worriedness increases, then gold goes higher. So what do we have here? Let's kind of wrap this up. I think we stay in a bull market. I think equities are going to have a harder time moving higher as a major asset class. Parts of equities are going to do well. Maybe energy, maybe regional banks, kind of the parts you did not hear about in the first half of this year. And what's going to put a lot of downward pressure on most asset classes is the US dollar if it stays above that 101. Thank you guys for being in my world. I appreciate it. As I've said the last 2 weeks, I'm going to be stopping these market reviews soon. I think when I said it 2 weeks ago, I said 6 more weeks. So this is the third of that 6 weeks. And I'm going to be focusing more on financial advising, financial planning questions on YouTube. If you find yourself curious about what retire strong means or what it looks like if you have replication, that's a term that is very dangerous to retirement. It's one thing we eliminate. Go ahead and you get on our schedule and we can actually look at your portfolio in a portfolio x-ray and see how much replication is costing you. It's pretty expensive. Guys, let me know where you think I got it right, where you think I got it wrong, what I missed. If you have questions, leave them in the comments. And if you're curious about getting on our schedule, that's not where you don't put it in the comments. You just look for a link in the description to get on our schedule. Okay, thanks everyone. Appreciate you, and I will talk to you in a week. Okay, bye.